Hey guys, welcome back to Watch Trading Academy, and today we are talking crypto. I know, it's weird, right? Imaginary currency, imaginary customers, and suddenly it disappears. Could have surprised everyone. Well, some of us, some of you, not some of us. Anyways, but today we're talking about how has that caused problems in the watch markets. Well, let's talk a little bit about liquidity, because liquidity is a big factor of how people make purchases. Obviously, there are two types of buyers in the world of watches: those who collect and invest, and ultimately those who are buying out of vanity or out of desire. And what I mean by that is nothing wrong with that, but individuals who want certain things for status or ultimately come as part of their successful. I mean, as you get more successful in life, you get watches, you get cars, you get big houses, you get planes, and watches are a big part of that. We all know that watches have been a symbol of wealth for quite some time, and so there are a lot of people who purchase watches for just that reason, while others do it for the right reasons in the sense of collectability, long-term value, or ultimately create an asset class of their own within their portfolio of investments. A lot of people just do it for vanity. Like, there is a lot of leverage to being able to wear a $200,000 or $300,000 Patek or AP or RM and be able to make that claim, right? Hey, I'm wearing a $300,000 watch. You must be doing really well. So a big piece of what has occurred in the watch market was something that actually followed the car markets. If you've been paying attention to the world of cars, you've been noticing that over the last 2 years, cars and watches have been rising crazy. And a lot of people blamed the supply issues on that, but reality was that there was an increased level of new buyers in the market for watches. And we're not getting into cars. You follow Exotic Car Hacks, my other channel, for that. But today for watches, you could have seen that there was a huge amount of new watch buyers over the last 12 to 24 months. And if you've been smart and actually joined Watch Trading Academy 2 years ago, then you made a lot of money doing that. Now, if you didn't, there is still time, because the watch markets are still very hot, and you can click the link in the description of this video and learn from my free training on how to become a watch investor literally in the next 90 days. So click that link whenever you get a chance. But let's go back to this for a second about the crypto markets. So whenever there is a rise in auxiliary investments such as crypto, NFTs, even stock market, people feel good about making money. And ultimately, they don't understand the value of that money because they didn't work for it. So in a conventional mind, you typically go, okay, I have worked 22 hours and I have made X amount of money. Now, you've left $1,000 in a bank account or in a crypto fund, and all of a sudden it went up and it became 30 grand. Well, your value on that 30 grand is significantly different than the 22 hours you put to work to basically make 5 grand. So the way you view that 30,000 is a lot more disposable and easy to dispose of than the first 5,000 you made through all of these hours of hard labor, because you don't have a scale of value to that excess money coming in. Meaning, let's say I work and make roughly $10 million a year, but suddenly good investment practices that are kind of luck in a way because things have gone up make my net worth go up to 100 million. I did not pay for that 90 million increase. So what happens is I get a lot more excited about upgrading my lifestyle to basically match my new status. And what happens in the world of crypto is that a lot of people made a lot of money very early. We're not going to talk about the legitimacy of why or how, etc., but rather that a lot of people made a lot of money early. And unfortunately, fortunately, some people were smart enough to get out. Unfortunately, some people thought this is going to happen forever and this is just an infancy stages, is never going to collapse, and it still could be true. But what we do know and what we do understand is that when people lose money or people lose their net worth or things go down and they're having a loss, their value scale is very different than when they have a gain. So when people have a gain in things, they don't view that value and typically become big spenders. But when they have a loss, even though the loss wasn't realized, meaning they didn't sell their money and then lose their money, they basically left their money in a fund and that fund went lower and they lost access to that type of fund, their thoughts just get crushed. The entire opposite occurs, where someone believes that they really had that money despite the fact that they didn't realize their gains. And so there's two key things that happen. They feel a lot poorer, and they also don't understand the value of what they've lost, so they panic. And what happens to that is quite simple. So when you make a lot of money, you go buy a ton of things. But when you lose that money, you panic really quickly that you could lose even more money, so you get rid of those things. And what's happened in the Rolex market is that Rolex is just a very noticeable brand. It's a brand that everybody, regardless of who you are, just kind of wants a Rolex at some point. It's a very entry-level kind of show-off brand, right? And so what happens is these markets is whenever new consumers enter a market, they typically don't go entering very niche markets or hard-to-get markets. They enter a more generic market. So Rolex becomes that first line of generic market to enter. And so Rolex sales have gone to the roof over the last 7 months, like so high, as a matter of fact, that even base, average, dumb, really bad Rolexes still were able to be bought above MSRP, even though they were just trash. And part of that is because you have nothing to buy. So you walk in a store and you go, I have 30 grand to buy a watch. They go, well, we only have this ugly watch that nobody wants. And you go, well, I'd rather have a Rolex than not. So you spend that money. But when tables are reversed and you lose that money in the crypto markets, you start to get panicked. And once you accumulate more cash, you start selling more of your watches. So what occurs is when you have this very fast rise of consumers and the demand increases at that rate over the last 7 months, well, when a crash occurs, especially a significant crash like the one we've seen over the last 60 days, you start to have a very spiraled out of control effect on that first brand, which is why Rolex has taken probably the biggest hit along with Patek. But if you look at rare AP models and you start looking at very niche, hard to get RM models, you're still not seeing any types of declines as severe as you're seeing in Patek and Rolex. So that said, what do we do about it? Well, simply put, we understand that anything that goes up doesn't always come down, but if it does come down, it comes down just as fast if it was inflated. And when demand was creating an inflation so severe that people were paying so much over sticker for something, then that inflation wasn't sustainable. So as the demand backed off, that inflation went down and people lost quite a lot of money. You can refer back to a video in Exotic Car Hacks on the G63 market for a very similar effect in the auto industry. So what should you know if you're holding onto a watch perhaps and its value has gone significantly down because of this drop in the crypto markets? You should know two things. One, the watch markets will rebound at some point. Now, how far do they go down? I don't have a crystal ball. I'm not really sure if they keep going down. We've already seen a severe slowdown in drops of pricing across many of the higher, nicer end watches. Now we've seen drops in pricing across the board, but some of the nicer, harder to get watches have kind of settled at still a very high baseline and have decided to stay there, not dropping any further. So you're starting to see the slowdown in the drop. And that typically tells us that you have a consolidation of market, no different than stocks, and at some point you're going to start seeing again normal rises in value. So that said, here's something to understand and here's something to put in play, right? If you're stuck in the wrong watch, you have to basically identify and ask yourself, how far down am I and what is that margin of error? If that margin of error is over 30%, you may want to think about just getting rid of the asset because you bought an overinflated asset and it is very unlikely that it will come back to that dollar range itself. If the deflation or the loss in value is under 30%, you have to take a look at the market and start to analyze through wholesalers what is the rate of that watch today and is the trend still going any further down. If the trends are larger, like the watch goes from 150 to 130 to 110, you're going to start seeing huge drops, which means that there's a lot of ground to cover. However, if the watch 1 week is at 105 and the following week after is at 100, then it's back to 103, then it's back to 100, you're seeing a watch with a lot more stability and much better long-term collectability. So the crypto markets may have had an impact on the watch market, but it certainly hasn't destroyed it, nowhere near as much as the crypto market itself has been destroyed, and also how much the stock market has suffered over the last 6 months. Watches still to this day remain one of the best asset class investments you can make, especially knowing that there are dips like the one we're in where you could still buy that dip to some extent, but be careful and make sure you buy the right models. If you don't know what the right models are, again, click the link in the description, join us at Watch Trading Academy, and we'll be able to teach you exactly which models to invest in, what to buy, what to trade, and how to position yourself to be in a good place to build a really solid investment portfolio in watches. Hope you found this useful. If you want more content like this, like, subscribe, and put in the comments. Let me know your thoughts on how much did the crypto market impact the watch market. I'd like to know more, and click the link to make sure you subscribe to our future videos. And we'll catch you next time on Watch Trading Academy.